Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here. What a morning it's shaping up to be. What a last 24 hours. The Federal Reserve coming out, cutting interest rates by 25 basis points. That was largely expected, but the commentary, as I said, was going to be the most important thing. Jerome Powell was hawkish in his commentary. We did see a weakening of the markets yesterday following his press conference. All right, now listen, that was just the start because after hours, we got earnings from Meta, Microsoft, and Alphabet. Meta and Microsoft dropping, Meta dropping over 10% this morning. That is a massive drop on Meta, while Google/Alphabet is rallying to the upside. I'll talk about those levels in just a little bit. We'll get into the trading zones for those trades. All right, so then we fast forward to overnight here on the East Coast of the United States. We knew President Trump and President Xi were going to meet. The question, and I said this to you yesterday in the game plan, were there going to be concrete positives? And the answer was not really. There were a few things. First of all, the meeting was amazing per Trump. That's always the way it is with him. It's always the best meeting ever, whatever it may be. We knew that was going to be said. But the kicker was, were there real keys to a deal? Were the tariffs really changed a ton? And the answer is no. Basically, tariffs just on the aspect for fentanyl and that drugs coming into the country, those were lowered, but the average tariff rate is still at 47% on China. So again, all in all, some positives. Supposedly the rare earth stuff is fixed. We'll see. There's been a lot of things, but nothing signed in stone. My point is yesterday I said, if we don't get specifics on a deal, like a comprehensive deal, which the market had rallied on Monday for, we were going to sell off. And guess what? We're selling off this morning. Let's take a look at the charts here as I bring up my charts on the screen. Let's get that right into it. Apologies for the delay there. There we go, right there. And what we're seeing here is the S&P future is dumping this morning. Beautiful move down. This was the Fed low yesterday when Jerome Powell basically said, there's no guarantee rate cut for December. Markets did recover off that on the hopes of good earnings from Meta, Microsoft, and Alphabet, and then a President Trump and Xi meeting. But ultimately, we're seeing this morning, the markets are coming back into that low. Now, this is the kicker right here, the S&P weekly chart. This is what I've been focusing in on, right? Every day this week, we've talked about this. You have this weekly chart on the S&P with this monstrous parallel going back to the COVID March 2020 lows, connecting through the bear market lows, the big correction lows, and the liberation sell-off lows, right? And that high is the bull market high of 2021. We've been piercing it the last few days. Today, we're set to open about 30 points lower on the S&P. We'll see, does that bring us back in? Where do we end by Friday on this weekly candle? Are we still above? Are we below? Where do we end? But again, guys, when it comes down to the charts, when you have weekly levels, so if you're looking at an intraday chart and you're on the 1 minute or the 5 minute or the 10 or the 15, those are near-term levels. They're important, but only in the near term. The bigger the time frame, the more important those levels are and the more powerful those levels are. So when you're talking about a weekly chart here and you're going back literally to March of 2020 with this parallel, and then you're using this secondary trend line from the lows of October 2023, so that's going back 2+ years now, that, my friends, is major in terms of a level. So again, do we have a market top? We obviously won't know for days, maybe weeks, or even months, but certainly this would be a spot where we have many of these big events where everyone assumed they were going to be grand and great. We assumed, well, listen, not me, but analysts out there, Meta was going to have great earnings. Alphabet, great earnings. Alphabet did have good earnings. Microsoft, good earnings. That stock's down. Meta's getting crushed. We're seeing, by the way, other stocks this morning getting absolutely annihilated that reported earnings. I'll go over trading levels, but Chipotle, Carvana, FMC, I mean, all of these names are getting hammered this morning on earnings. All right. In addition, topping signals. Number one, sentiment amongst retail, extremely bullish. That to me is a warning sign. Number two, what did NVIDIA do yesterday? NVIDIA hit $5 trillion in valuation. All right. And that, again, even numbers like this oftentimes create sell-offs because it's kind of like everyone's holding their breath for $5 trillion. And then once $5 trillion, Okay, we can breathe again, right? All right, now we pull back, we sell into that. That's psychology. That's human psychology 101 when you're in trading. So, again, you got a doji yesterday on this chart of NVIDIA. Today it's pulling back a little bit. We are seeing the semis pulling back. All right, flipping over to the NASDAQ. NASDAQ was right into this trend line. This is your top trend line since the April sell-off lows. You can see we came up, and then since then, we've just been bobbing against this line. Sure enough, we stalled out for a while. We pushed up. Where did we top out yesterday? Right into that. And today we're pulling back on the NASDAQ. All right. In addition, by the way, speaking of market cap, not only did NVIDIA hit 5 trillion in market cap yesterday, but Apple tagged 4 trillion. So again, you see these big even numbers getting tagged. And oftentimes we know that that can be kind of like a letdown, almost like a sell the news event, just like we're seeing with the President Xi and President Trump meeting, a sell the news event. There were some positives that came out of it, but the market, on terms of the rally that we've seen since last weekend, we were looking, basically the markets were pricing in a Goldilocks scenario, and they're not getting it. They're not getting it from that meeting. They're not getting it from Trump. And earnings, yes, there have been good earnings, but let's be honest. I mean, Meta being down over 10% on earnings is not a great look for the trillion-dollar stocks. All right, let's talk a little bit about the dollar. The dollar continuing to rally up because of a more hawkish Fed. You can see, again, this is the daily DXY chart, which is, again, the dollar against a basket of currencies. If we do push up, we know our resistance level is right in here. Take a look at this resistance level. It's a great one here on the dollar. All through here was support, and then we broke resistance, and therefore you assume this 100.5 to 100.9 area, that's going to be significant resistance. The 10-year yield, look at this, guys. Huge pop yesterday. It's continuing to pop here today. We're moving back above this key trend line here, which stretches all the way back to the lows from September of 2024. Notice it's in a bigger parallel. So if yields really were to spike, this would be major resistance up here at 4.67%. I don't think yields go that high, but in the near term, am I watching this as a pivot line? Meaning if we confirm back above this level, in the near term, you'd have to be bullish on yields until we break and confirm back below this line. So lots going on in the charts, guys. Absolutely love this action. I like this action because it gives volatility. And if you're a swing trader like me or a day trader, this is our lifeblood. Without volatility, there's nothing for us to do, right? Things just grind one way or the other, right? We need the volatility as traders. Plus, it gives opportunities. The best buying opportunities are when the market's fearful, right? For instance, April of 2025, liberation, tariff, panic, sell-off. Great buying opportunity at those lows. All right, so let's get back to the charts. Meta here. Look at Meta here getting slammed down. Lows of the session basically in the pre-market. This is your 10-minute chart on Meta, folks. And again, right now we're trading at 674. This is from a daily close yesterday of 752. Okay, that is over 10%. Now, for the longest time, every probably once a week, I've gone over the Meta daily chart with you guys in my trading game plan. I showed you the head and shoulders. I told you when it broke. I told you the calculated target. And again, guess what, folks? We are getting closer and closer to that calculated target. Look at this beautiful shoulder, head, shoulder. The neckline was right here. Notice we fell and then we bear flagged and we stayed underneath that level. And then again, bear flagging into earnings, still with the head and shoulders as the dominant force. What does that mean? It means eventually we're likely headed down to this target at around 652. And by the way, some of you may say, oh, well, how do you know that target is the target? You just do a simple calculation, folks, and I can show it to you right here. You basically take the high of the head to the neckline, and that should be, once you break, that should be your measured move down to the target, right? So the highest point here, we drop that down right there to the neckline. We then take that based on where it broke, which is right here, and that gives us our target zone. And look at where we are, lo and behold, right, getting close. We're still about $20 away, but that's only about 2.5% or so on Meta. That's not a big move. Microsoft is down pre-market. It's not a huge sell-off, but again, it is lower in the pre-market session. If we look at this chart, we had kind of kissed double top just over the last few days, and now price is coming back down. I still think Microsoft eventually goes to retrace to its former scene of the crime here. This was your previous high before the breakout. Eventually, I do think Microsoft comes back in to this 467, 470 level. Now, on the other side, This chart has exploded to the upside. So remember, everyone was saying, oh, Google, Alphabet, their search engine is going to be, null and void because of AI and da 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 da. And that's why expectations come down and it enables companies to outperform expectations. And so all of a sudden, Meta's not looking so bad now, right? Gemini is doing well, which is their AI. Their search stuff is still going pretty strong. And it enables psychology of investors to have low expectations. And versus a Meta, we're sky high, Microsoft sky high. Apple today, by the way, after the bell. Apple and Amazon after the bell. So, I mean, this isn't stopping. This party ain't stopping, folks. We're getting more intense. We're going to get more action here in the after hours today. So be ready for that. That'll be the icing on the cake one way or the other, either for continued downside in the markets if Apple and Amazon sell, or a bounce back up if we end the day negative. All right, so Google, what are we looking at here? So we are trading here. If we zoom out, we're trading at 295 up here. Are there any levels, because it's at all-time highs, that we would pay attention to? And the answer is there's always a level of sorts. But the question is, what's the level here? And again, I would dare say, and you can see we're even above that. I mean, that's pretty remarkable here in terms of movement. I don't have a whole lot as I'm just looking now at levels. I mean, even this level here, connecting these pivots, and we're above it. And so I'll just have to abdicate here and just say, hey, listen, let this chart trade as it will. I would expect the chart of Google/Alphabet to pierce 300. It's so close. It kissed it pre-market. So I would expect to pierce the 300. And then my guess is it will fade off of that. But it's very rare a stock gets so close to 300. It's got to like 299. And intraday, it doesn't pierce 300. So look for that, folks. We'll see if that happens. All right. Carvana, you can see getting hammered here on earnings. They actually did well on earnings, but their margins are starting to compress. Guys, this is a weakening economy. Like, jobs market is weakening, and basically the stats are now showing if you make less than 200,000 a year, you're struggling. And that's really sad. Like, that should not be the case. But because of inflation, because of costs of like insurance and this and that, it's just the nature of the beast. And so when you look at the population of the US, like how many people are really making more than 200,000 a year? It's not a whole lot. Now, those people that are making a lot and are invested in the market and have been, they're spending like drunken sailors still. But everyone else is struggling, and margins are going to compress. We're even seeing this in the chip sector more and more, even though the AI trade is so hot. So we have Carvana trading down at 320 today. All right, we know we broke this longer-term daily trend line. That was a bearish signal that it likely is going to go lower, and it certainly did. I am going to be looking for this pivot point area right here. 288 for me. It may not get there today, but notice that is a former high here and a low here, and even a little high right there and a low there. That gives me a firm basis of where to anticipate Carvana finding support. Chipotle getting absolutely crushed, guys. And this is a great example. Basically, Chipotle's CEO saying, hey, listen, even at, now you go and buy a burrito at, you get burrito and chips at it's $20. I mean, it's not super cheap anymore to go to Chipotle. We know prices have increased. And by the way, that's one of the things that the CEO even said. He said they're not going to pass on more costs because they're seeing that literally it's crushing people coming into their stores, their food stores, right? And so they can't pass on the costs anymore, which is crazy because that's why you're seeing Chipotle coming down like this. They did warn, they did tell us guidance was going to be weaker. Now, the stock is trading here at 31.67. This is a huge drop of basically 20+% from about $40 close yesterday. You got to zoom out on the chart quite a ways to find your key levels. Now, one of the things I'm seeing here, let's look at this, and I'm just looking at this right now. There's going to be a pivot at a pierce of 30, basically 29.50. And then a really good level. Wow, 27.25 is going to be really, really good. So again, day tradable probably at 29.50. Swing tradable possibly down in this range here. You have 27.25 and then double bottom at around 24. This area here you'd expect it to find some support. But again, look at what's happening, folks. I mean, the AI stocks are literally the only ones keeping this market up at this point. Whether it's NVIDIA that's made new all-time highs, hitting $5 trillion, or ancillary plays. And even some of these are starting to fall. And by the way, in regards to Meta, so Meta not only missed because of $16 billion tax bill. Now, you might say, oh, it's a tax bill. It's a one-time thing. That's not the kicker. Zuckerberg again said, hey, we're going to ramp up even more spending on AI. And people are having visions and flashbacks of the metaverse. Remember when the metaverse was the big thing coming and Zuckerberg was like, hey, we're going to spend billions and billions, and nothing came of it. And now investors are starting to say, uh-oh, this looks very similar. And that's why that stock is getting crushed. Now, by the way, Meta is getting into areas where I actually, listen, it's going to hit that support probably, which is the head and shoulders, but it's actually getting into day tradable levels down here. We'll keep an eye on that. All right. Other stocks. I mean, holy cow, there's so much to discuss. eBay's down 10% on earnings here. Let's look at eBay's daily chart. By the way, I love earnings season. You can tell how hyped up I am for earnings because, again, it just creates such opportunity. 86.50 is going to be good support. If it breaks that, though, 83.50 is your next spot. I would not swing trade this until at least gap fill down here. Day trade, then this might be a swing trade at around 77.50 on eBay. FMC, look at this drop. This stock closed yesterday around 29. It's trading at $20. 30+% drop on FMC. Take a look. You got to zoom way out. Holy cow. I got to go to my weekly chart for this. Look at how far back we're going. And this is what I'm talking about, guys. This is at $19 and change now on FMC. I probably wouldn't touch this until, there'll be a day tradable level, maybe around 17.65. It's not too far away from that. And then a second day tradable level around 15 and change. But really this low, which was your 2008 financial crisis low, that's really the swing trade level. And that's around 13 and change. This is where we are. Now, Roblox reported earnings. That stock's down. That reported this morning. It's not a big move, so I don't have trading levels on this. But if we look at the daily chart again, it's kind of been hovering up in this range. On a swing trade basis, I would be very careful because it's going to break major support today, right? So you have this trend line here breaking today. You notice support, and we're going to gap below it. That would likely open up a trap door. 117.50 would be a gap fill for maybe a day trade, and then 112 and change. Okay. Holy cow, I got to take a breath here, folks. But again, you can see there's a lot of action, and it's not only just the earnings, right? We had the President Xi meeting with Trump. We had the Fed. This has just been a crazy period. In fact, a couple days ago, I said the next 2 to 3 days, we're going to dictate the next big move in this market. And right now, listen, the markets can recover. We'll see. But right now, I'm seeing signals that we could be on the verge of that kind of ominous but elusive 5 to 10% correction going into November. All right, Bitcoin. All right, here we have Bitcoin, guys. Again, it broke above, never confirmed. I warned of this, and look at where Bitcoin is. It is now trading at 108,000. This still, to me, is favoring a move down to somewhere between 93 and 95,000. All right, so I still think Bitcoin's going there. The only thing that would change my mind would be the charts. If the charts change, then I change. When we got above here, there were a lot of bulls that started jumping back on saying, oh, stock market's hitting new all-time highs, so Bitcoin should go there. I said, unless we confirm, you can't go with that. And we never confirmed the break back above this level here, and we are now back below. You got to learn this signal, folks. The confirmation signal is a game changer for us as investors and traders. Gold yesterday on the Fed was up early, and then on the Fed it dropped. Today it's getting a small bounce. It is still hovering around my first key support level. Again, 90% chance it was going to hit this. It hit it. The next level is 75%, which is still pretty high. Let's be fair. I still think it gets there. Once we get into these will be a little tougher to hit, these lower levels. But again, so far, this has been a great correction on gold. The question is, if the market starts selling, do people run into gold, or does gold sell with the markets? Today, we're seeing gold catch a bid with the stock market down. And remember, what's interesting here is even the dollar is up and gold is still catching a bid. That's important to take note of. That is telling me. So listen, if the dollar was down and gold was up, it's like, okay, well, the dollar's down, gold is up. But the dollar being stronger today is very interesting. And that, again, tells me there is a safe haven aspect to the buying in gold. I still think it comes down to at least the next target, but it's interesting and it's good to see for my long-term gold holdings that it is still behaving like a safe haven asset. Let's look at silver real quick here, guys, as we go into silver. Silver also getting a small bid the last few days. Interesting that gold was down yesterday, but silver eked out a little bit of a gain. But again, notice the resistance level right here. This is your key kind of hump area right here on silver. right around $48.50 to $49. If we can reestablish above that, it'll open the door for a bigger move up, right? But as of now, this is still resistance, and therefore you respect it, and we'd have to favor the downside until proven otherwise. Oil today, let's take a look. Oil was into this resistance. So far, the rejection has been complete. It's coming back in. But at this point, there's no trade on oil. We're just watching to see resistance at $62 a barrel. Support remains here around 57. Which way do we go? Which way do we break, I should say? We could just hop in this area for a while, but the longer we stay in it, honestly, the more bearish I would get on that. Natural gas was retracing the breakout. Let's take a look at nat gas. And nat gas is catching a bid. Still hasn't come down to my buyable level zone yet, but that's okay. I'll continue to monitor natural gas here over the next couple days. You can see, again, the bigger breakout that took place here on nat gas. And again, the bull case from a fundamental standpoint on nat gas is that we literally have no nuclear reactors that are being built yet. We have those that are in the planning stages, but it'll be like 5 to 7 years before they're done. And so as all these data centers are being built, which, by the way, it drives me nuts because you, me, all of our electric bills and energy bills are going to skyrocket because of these data centers pulling. So we're basically going to subsidize and pay for these data centers, which, you know, unless they're sending us a check in the mail because we have ownership, what the heck, right? But listen, it is what it is. That's what the politicians are supposed to have their head around. In any case, the point is, again, where are they going to get that energy in the next 5 years? Nat gas is probably the likely scenario. Granted, a weaker economy will kind of push it down, but then you have the data center demand that might push it up. We'll keep an eye on natural gas. Wow, it's getting late. All right, I got to get to my trading room, guys. There's lots of action here. If you're in the live day trading room, be ready. There should be some good trades this morning with this action. But as always, folks, I thank you from the bottom of my heart for paying attention, coming every morning, being zoned in with me for this great action in the markets. And don't forget, folks, like I always say, if you enjoy this, if you like these game plans, all I ask, just share them with friends and family that you also think would like it and enjoy it. A more kind of cognizant, probability-based approach. Have a great one, folks. Take care.